Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you three different stocks that is in a present situation that allows us to buy the dip. I'm going to go ahead and show you the strategies I will be using with these stocks. And most importantly, I'm going to share with you my personal exit strategies. Now, if you guys are new to options trading, or you're trying to use options in order to make some additional income to help supplement your regular 9 to 5 job, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be going over three different stocks that present a very good buy the dip opportunity. I'm going to show you what strategies I will be using with these stocks, and I'm going to show you my exits as well. Now, I have gone ahead and made detailed video about each one of these stocks. So if you want to see those detailed stocks, go ahead and type in the stock ticker in the channel and those videos are going to appear. Also, I do have more of these undervalued stocks, but for the purposes of not making this video too long, I'm only going to highlight three for right now. If you guys want to see more of these undervalued stocks that also present this opportunity, then in the comments below, just go ahead and just type in buy the dip. Now, let's go ahead and get down and dirty with options. The first buy the dip opportunity that presents itself today is going to be none other than Kenvue, and that ticker is going to be KVUE. Now, for those of you who do not know, Kenvue is in the healthcare, more precisely, the pharmaceutical market. So let's go ahead. We're going to go to the advanced feature here in order for us to check out the chart. We always start by checking out the chart. We're going to go over to the 1 year outlook and see what the stock has been doing. Now, for those of you that are regular subscribers to the channel, you guys know this is my favorite setup in order for me to trade options. I like it when the current share price is below the 200-day moving average for a good company. In my opinion, I think Kenvue is a very, very good company. So the current share price is at $14.22. However, the 200-day moving average is going to be around $21. The 200-day moving average just simply tells us that that's the price that the stock has been trading for the last 200 days or 6 months. Now, the RSI, which is going to be down here, the RSI for Kenvue has dropped some more, and now it's sitting at around 37. So it hasn't dropped that much from since I made the last video. Because of the recent market sell-off for this week, Kenvue has dropped even further. Now, I have gone ahead and done my own due diligence. I know this is the stock I want to own in my portfolio. So now that the stock has come down some more, I'm willing to buy even more. I'm willing to do even more strategies on this stock. So let's go ahead back to Kenvue right now. I'm going to show you exactly what I'm doing with this stock. Now, Kenvue right now, like I mentioned, the current share price is $14.22. However, the analysts have this fair value at $24.50, which presents a $10 upside if the stock goes back to $24.50. So we have about a whole 50% upside for this stock. So what I'm going to be doing now, I'm going to be doing two strategies with Kenvue. Let's go ahead to trade Kenvue options right here. Let's open up the options chain. Now, the first strategy I will be using with Kenvue is the DCA option strategy. DCA stands for dollar cost averaging. So I am buying this stock on consistent intervals in order to grow my position in this stock. The next thing I will be doing with Kenvue is that I'm going to be doing one option strategy. So that option strategy is going to be, we're going to be going to buy, we're going to be going to call, and we're going to be going to expiration date. Let's go to a long dated one. We're going to be going to January 21st, 2028. The reason I choose such a long dated expiration date is because I want to give myself enough time in case this stock continues to fall or there are some other volatilities in the market. With this date, this gives me around 2.5 years in order for this trade to work in my favor. Now that I have the buy, I have the call, and I have the long dated expiration, I'm going to choose my strike price. Now, the price I will be going with right now is going to be the $13 strike price because me personally, I think the best or the fair value for this stock is the $15 price. So I'm going to be a little bit more conservative. I'm going to choose the $13 strike price. For the $13 strike price, is going to cost me around $4, or in the real world, that's going to be $400. Here's my exit strategy. Once I pick up this leaps option in my portfolio, I'm going to leave it in my portfolio and do absolutely nothing. The reason I'm going to do that is because I more want to invest in this stock as opposed to trade this stock. So the way I will be making money with this stock is that I'm going to have it sit in my portfolio and I'm going to wait for this share price to appreciate in value. Once this share price starts to appreciate in value, then I'm going to decide when I want to close out this particular option trade, and I'm going to lock in my investment gains. Now, the second stock for today, which is undervalued, I think we could do a buy the dip opportunity, is going to be none other than New Holdings, or NU. So let's go ahead and open that up right now. Okay, so here we are on NU, and like I said, I have made a video about this, so I'm going to give you a quick overview of this. NU is New Holdings. It's a company that's responsible for New Bank. New Bank is a digital bank that offers banking services in South America. Most of the business is split between three countries in South America, which is going to be Colombia, Mexico, and Brazil. So this is a very huge bank, and this is very good competition for SoFi. Let's go ahead. We're going to jump into the advanced feature right now in order to see the chart. Let's go to the 1 year outlook. Now, as of making this video, the last video I made, this stock was a bit overpriced. And I know the stock is overpriced, but I still decided to go ahead and do option strategies and invest in this stock. The reason for that is that I have a long outlook on this stock, and I think this stock is going to be very valuable 5-10 years from now. So now that the market has pulled back, I see even more opportunity in order for us to buy the dip. So the current price of NU is going to be $14.68, which is still above the 200-day moving average. The 200-day moving average is around the $13 mark. The RSI has come down a bit. It's a bit closer to the 50 RSI, which is really good in my book. So what I'm going to do for this one, because this price is over the 200-day moving average, I'm going to go ahead and try to see if I can get a very strong support. So I'm going to go ahead, draw my trend line right now. And the very strong support I see is around the $14 mark. So around 14-ish is a very strong support. The reason I need to find a very strong support is because the share price is above the 200-day moving average. I need some kind of price in order for me to choose when I'm doing my option strategy, or some kind of price I could use as my guideline. So let's go ahead. We're going to go back to new, and we're going to go and jump right into the option chain. So let's go ahead. We're going to go to trade NU options right now to open up the options chain. And then now I'm going to be doing a similar option strategy. We're going to be doing buy, we're going to be doing call, and I'm going to go to the strike date. With this one, I'm going all the way out as well. And like I mentioned, the reason I'm going all the way out, especially for this one, is that the current price is trading at right now, which is $14.68. 5-10 years from now, this price is going to look like absolutely nothing compared to what that price is going to be, in my humble opinion. So I want to give myself enough time in order for this price to appreciate and move up so the trade could work in my favor. So now I'm going to go ahead, I'm going to choose my strike price. The strike price I'll be going with is going to be, we're going to be going with the $13 strike price. For the $13 strike price, since this is a buy option strategy, I'm going to have to pay. The amount I'm going to have to pay is going to be $5.95 or $595. Now, $595 represents a very small part of my portfolio, so I have no issues with going ahead and purchase 2 of these option contracts. So once again, my exit strategy for New Bank, I want to treat this as more of a long-term investing than a trading opportunity. So what I'm going to be doing, I'm going to be doing similar like what I did with the first option strategy for Kenvue. I'm going to be having this leaps sit in my portfolio, and I'm going to wait until the share price appreciates. So there you have it. This is the second stock that I think presents a very good buy the dip opportunity. Now, the third stock for today's video that presents a really good buy the dip opportunity, and there's multiple strategies that can be used with it, and that's going to be none other than Novo Nordisk, and that ticker is going to be NVO. So let's go ahead once again. We're going to open up the advanced feature right here. We're going to go to the 1-year outlook to see how Novo Nordisk is doing. And once again, this suits my criteria in order for me to trade this stock. So the current share price of $54.66 sits below the 200-day moving average, which is around the $70 mark. So between the price that the stock is trading at right now of $54 and the 200-day moving average, it represents around a $15 upside. The current RSI to the bottom here is going to be around the 45-ish RSI, so it's below the 50, so I think that's good as well. Now, let's go ahead. We're going to go to Novo, and we're going to see what strategies we can use for this. Now, the fair value of Novo Nordisk, according to the analyst, is going to be $71. The difference between $71 and the current share price right now, let's say is $55, is going to present to us a $16 difference. So if the current share price does happen to go up to the fair value, it does not need to go all the way back to where the stock was. If it even goes to the fair value, then we're looking at a $16 upside. A $16 upside is a very, very nice upside. So let's go ahead now. We're going to go down to the trade Novo options in order to open up the options chain. Now, once again, with Novo, because I have such a long outlook for this stock, I'll be doing the first option, which is going to be the DCA model, dollar cost average. Now that I do the dollar cost average, I'll be doing also what's known as a leaps option in this one as well. So we're going to go ahead, we're going to choose a strike date, and we're going to be using the exact same strike date. Now, you guys have seen me use the exact same strike date for all three of these. The reason I'm choosing that is because the price I have to pay at these strike date, my portfolio could afford it. You don't need to be going all this way out. Feel free to choose what works for you and what you could afford with your portfolio. So now that I have buy, I have the call on the long dated strike date. I'm going to be going ahead and choose my strike price. The strike price I'll be going with is going to be the $50 strike price. So I'll be getting it right at the money. Now, once again, this one too is a buy option. So I'm going to have to pay the amount I'm going to have to pay is going to be $18.65 in order for me to add this leaps to my portfolio. Now, Novo gives us another opportunity. Because this one is in the healthcare sector, this one pays some very, very good premiums. So what we're going to do, instead of like the previous two, I'm not going to sit with this in my portfolio and do nothing. I will be using this to make consistent income. So what we're going to do once we go ahead and we purchase this and we have it added to our portfolio, we're going to go ahead and make consistent income. So we're going to go to sell. We're going to choose call. And now we're going to be doing monthly expirations. So I'm going to be going to November 21st, which gives me around 36 days to expiration. 36 days is perfectly fine for this option strategy. Now we're going to go ahead and choose the strike price. The strike price I will be going with is going to be the $80 strike price. The $80 strike price gives me a chance of profit of 95%. That is an extremely high chance of profitability. That means the chance of this trade going against me is only like 5%. Now, because of such a high chance of profitability, I'll be minimizing the amount of money I get as premium. So in this case, the amount of money I will be getting is going to be 30 cents, or that's going to equal to $30 in the real world. I have zero issues accepting $30 based on my leaps option. The whole point of me getting the leaps option, for those of you that do not know, a leaps option is a bullish option strategy. So when you do decide to do the leaps option, you are of the mindset that this share price here is going to continue to go up. Now, by me doing covered calls against my leaps, I want to try my best to make sure I am not assigned. If you do get assigned, then I'll go ahead and lose my leaps. And if I do lose my leaps, I will lose the ability to make consistent income. Once again, if you guys don't know the leaps option, just go ahead, type leaps in the chat, and the video is gonna pop up. So there you have it, investors and future investors. These are three stocks right now that I see has a very good buy the dip opportunity. Remember, the stocks and the strategies on this channel representative of what I'm doing with my own portfolio. Always make sure to do your own due diligence before investing. Now, I have been dollar cost averaging in these three stocks, and I do have option strategies with these three stocks. The reason I'm making this video is because the stock market has a slight decline, a slight sell off. So this presents another opportunity for me to go even harder or double down, so to speak. So that's what I will be doing over the next couple of weeks, over the next couple of months. Now, if you guys like any of these stocks here, or you guys are trading it, or you have already added it to your portfolio, then go ahead and let me know in the comments below. Now, if you guys haven't already, now would be a good opportunity for you to go ahead and like the video, subscribe to the channel. Make sure to hit that notification bell to get these videos whenever I post it. Now, the most important thing is that I do make all this free content in order for me to help as many people as I possibly can to make income with options trading. So if you guys know anyone out there that's actually struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.